stock markets have been increasingly volatile this summer. Returns for market indices have turned negative, and the S&P 500 suffered its first 10% correction since 2012. If you're like me, you have received several messages in your inbox that ponder what to do in this volatile environment. The two main strategies that they suggest are number 1, stay the course, and 2, a diversified portfolio. While these strategies are sensible in a bull market, they aren't effective in a bear market. Therefore, the most important question is not what to do in a volatile market, but is this a bear market? The stay the course theory may make sense if you're an investor that doesn't monitor the markets regularly and can't forecast what is coming next. However, if you're paying an advisor, don't you think that they should avoid at least part of a major downturn? Over the past 15 years, investors have weathered 2 major bear markets, where indices declined over 50%. Managing risk by lowering equity exposure at peak multiples was the right strategy, not staying the course. What about diversification? Academic research tells us that during periods of crisis and high stock market volatility, correlations among equity asset classes increase. In other words, stocks move down together, and diversification is not enough to protect your assets. The only strategy that works in a bear market is to reduce exposure to risk assets like stocks when you're late in the bull market and heading into a new bear. This means moving money to more stable assets like US Treasuries or cash. This will allow you not only to weather the storm, but it allows you to buy stocks that you love at much lower prices. Are we in a bear market today? In the recent weeks, we have written that the US is likely headed toward recession. Valuations are stretched and earnings are in decline. The writing is on the wall, and we believe that we are in the early stages of a bear market. This is a time to de-risk and move a portion of your portfolio to safer assets. If you're interested in more investment tips, be sure to subscribe to our blog and visit runnymede.com. Thanks for watching and have a great day.